So you think of it this way, what we talked about for the first couple of sessions was the macro. We just had a panel on FDI, and everything looks great. It's not without challenges, but the reality is the trend, the demographics, everything is fantastic. And so Michael talked a bit about, Vietnam economically decoupling from the struggles of the rest of the world. Now, what a lot of people are probably asking is, okay, well, what about the market? Can the market decouple? And so what we've seen, and this is not just the last couple of months, but in any kind of crisis, when there's extreme stress in the system, correlations go to one. So even though Vietnam equity market performed extremely well in 2020, performed extremely well in 2021, 2022 has been a struggle. Certainly last month, which was the worst month since March of 2020. And so what we've asked Ismail and Tu to discuss is, what does the market look like today? What is our view on where it's going? And as an active manager, how do we add value? Because if the economy's great, what are the opportunities for the market? And so for the next 45 minutes, we'll again, have kind of maybe 30 minutes of back and forth, and then we'll open it up to questions for the group. So, Ismail, as we get started, I think it'd be helpful, I'm going to give you the remote here, maybe just kind of show people, because oftentimes the economy is different than the market in terms of its composition. So maybe if you could start by just saying, what does the market look like here?
Sure. So let's kick this off. Oops, go another way. This pie chart you see here is pretty much the composition of the VN index, and it's not unusual for Southeast Asian countries, actually even Asia, at the start, to be dominated by the financial sector. In this case, the banks account for about 30.5% of the index, followed by 21.5% by real estate. That's over half of the market weight already. And then if you throw in the consumer staples, 11.9%, and you got a pretty sizable chunk in 3 sectors alone. The remaining sectors, industrials, materials, and utilities, you add it all up, that's about 88%. So it's a relatively concentrated type of sector allocation. A hot sector that was in force for a while has been technology, but as you can see here, it's only about 2.4% of the index. As Eric was alluding to, how connected is it with regards to, let's say, the economy? And 2/3 of the GDP in this country is driven by private consumption. And so the direct play, of course, would be the consumer staples, the consumer discretionary items. But you can also make the argument that property, especially for homes, banking, especially focus on retail, is also a play on that consumer angle.
So the other thing that people have been talking about, so now we understand what the market's like, and I think certainly versus other Asian markets, it's complementary. There isn't the 20% weighting in tech with no earnings. It's kind of the infrastructure, kind of the backbone, which is financial services and real estate. Having said that, what does the market look like today in terms of trading? Where are we versus kind of historical norm?
Right. This is a very interesting chart itself. Let me just forward to the chart that I want to show in terms of trading.
Not ADT, but valuation.
Oh, valuation, sorry. We are cheap. I mean, that's the bottom line. There is value to be had here. Our current valuation, for those who want to keep tabs of numbers, is 10.8 times PE. The lowest we gotten was about 10.4. That was during COVID. As you can see in this chart here, there's not many times that we've seen this much value on offer. To put things in perspective, the next couple of charts is that how do we compare to the rest of Southeast Asia? Vietnam has always traded a discount to either the ASEAN or the TIP, Thailand, Indonesia, Philippine basket. But that multiple, that discount has expanded of late. As you can see the numbers here, it's offering some pretty nice numbers, 10.8 times PE versus 14 times for the ASEAN basket. There's no argument that it's cheap in terms of markets. I think the only thing to note here is that the banking sector is probably the one thing that we would try to highlight as one of the cheaper sectors out there. Typically, a sector that gives you about 20% ROE would tend to trade at about price to book of about, say, three times. At the moment, it's trading around 1.1, 1.2 times, so there's definitely big value in that sector.
So as you think about it, we've got it, and it's funny, I'm in a good day responsible for business development, but there's a cliche, unfortunately, which is the absolute best time to invest is the hardest time to fundraise. And so here we are, we're so appreciative of everyone coming here, and PEs are at almost an all-time low. But yet corporate earnings are still quite good.
Yes. Earlier we talked about value on offer, but it's also growth on offer. So whether you're value or growth, this market does have it. If you can see, look at this chart in a moment, 17% EPS growth. That's probably the best in Southeast Asia, with the exception of Indonesia. And Indonesia is benefiting from the commodity play that we've seen over the past year. But if you look at the next couple of years in terms of CAGR, next year Vietnam is going to be up there. In fact, Vietnam is leading the charge as far as EPS growth for 2023. If I actually had a chart dating back to 2021, last year, and even 2020, the earnings never fell off the cliff. It was not like a contraction by any means of imagination. And I think that goes back to what Mike was saying earlier in terms of the resiliency of the economy, which underpins the corporate earnings that we're seeing at the moment. If you take a look at this chart here on the belief that earnings tend to lead markets, you can see the dotted plot, kind of following where the market's been going. A good testament to that is the other chart there, where last year the market was about 37%, and lo and behold, the EPS growth last year was around 36%. So there's something to be said about the earnings. Mind you, this year is a little bit of a different story. The earnings are still quite resilient, but we have other factors that kind of weigh down in the market, which we can talk to you either in the Q&A or later in this presentation.
Now you mentioned also liquidity. So average daily trading volume, liquidity, it certainly drives the market. So maybe make a comment and show some stats on that.
Great. Fantastic chart here to take a look at. You can see this market used to trade sub $200 million a day, and this is just from one exchange. There are 3 exchanges here, which the big one, of course, is the Ho Chi Minh Stock Exchange. And this one is represented by that index. And prior to COVID, it used to trade at less than $200 million per day. Post-COVID, it popped up to as high as, on average, $1.4 billion. In fact, there were days that it hit $2 billion in the HOSE alone. And the reason behind that is quite simple. You have limited investment options here in Vietnam. You can either put in property, you can put in gold, time deposits, and then you have the stock market. And when things were kind of shut down, and this is again part of that Robinhood trend that we saw globally, the Vietnamese just started opening up accounts. The amount of accounts they opened up, let me just put that perspective here, had reached as much as almost 500,000 in a month. And now the total accounts is about 6.5 million. That's roughly 6.5%. The closest parallel I could probably try and draw would be perhaps in Taiwan, where in the mid-'80s we saw the same type of numbers where penetration was running around 3.5%. But those same factors that I mentioned about limited investment options that was present in Taipei back then is present here as well. Throw in the fact that they have the same behavioral aptitude to I don't want to use the word, but to gamble. The stock market became one avenue that received a lot of attention. And I think the bottom line behind this is if you look at Taiwan now, that penetration rate is at 80%. That took decades to happen. I'm not saying we're going to hit that, but it sounds to, or seems to suggest that there's a long runway for Vietnam to continue that penetration rate from the current 6.5% that we see. And the importance behind that can be seen in the next chart, where it almost mimics, the VNI movement tends to mimic the value turnover. Since COVID, pretty much how the domestic investors' sentiment plays out is how the VNI played through. And as of end of 2021, 94% of the ADT was actually by domestic investors. So that's a big reckoning force that we have to really acknowledge.
And 2 quick things on the logistics side. Number 1, we just put QR codes on everybody's table. And so if you want to ask a question, scan the QR code. We find that's probably a little bit more efficient than running around with mics. And then I'm going to apologize to both of you because for whatever reason, I took for granted that you guys know who Ismail and Tu are. We do a great job of introducing the external speakers. So Ismail is our head of research. He's been in the region for over 25 years, has worked in Hong Kong and Singapore, the Philippines, Japan.
Tokyo.
Japan, I was going there. And so many countries, I was getting there. And so he's our head of research. Tu Nguyen runs all of our domestic and offshore mutual funds, and so she joined VinaCapital in 2015 to oversee the fund effort. So I apologize for not making those introductions in the beginning.
No worries. Let me just add one last thing, because this is actually a very important thing, considering how people tend to look at markets on a regional basis. The ADT on that topic, as you can see in this chart, is actually higher than Singapore, Malaysia, and the Philippines. Last year it was higher than Indonesia. Thailand's the only thing that trades more. And there were days when you can combine, as I mentioned, it hit $1.92 billion in a couple of days, where you can combine all those four countries I mentioned in Southeast Asia and still fail to reach that same volume or value turnover that Vietnam had. Okay.
So now we've got the foundation. We understand what the composition of the market is. We've seen the trading volume. We understand that it's frankly growing and cheap. You know, what is the near-term outlook? I don't know if you want to take that, or you have the...
In terms of the market?
Yeah.
Yeah, at the moment, the market is actually looking quite choppy. The volatility, as I mentioned, is driven by confidence and liquidity. And the fact that we highlight this fact, that little chart here where you see that liquidity has fallen down to about $500, $600 million a day, suggests that there is maybe some confidence that's missing. I don't think that confidence is missing domestically. I think it's about the exogenous factors. So much noise is going on with regards to inflation risk, recession risk, geopolitical issues. Those things have a spillover effect, and it goes back to the notion that when America sneezes, the world catches a cold. Like I have a cold at the moment. And in that sense, I think we want to look at what transpires as far as Fed and other central banks take in terms of the inflation picture, in terms of whether it's going to be a soft or hard landing. Michael Kolari, our economist, already said that for the next 1 or 2 years, he's much more bearish. If that is the case, an argument can be made that Vietnam should do quite well. But again, it's not about the fundamentals here. It's about that confidence and liquidity coming back to that market.
Excellent. So to alternate to you, so much of the conversations about the market, about consensus, you lead a team that manages active portfolios. So when you look at the market, you obviously have to think about the market, but the reality is you're going to buy 25, 30 companies. How do you think of what's going on fundamentally in sentiment? And so what is your view when you're building a portfolio?
As you rightly pointed out, we are active investors. So when we build our portfolio, it's all about stock picking, through a rigorous bottom-up research process. And also, in terms of portfolio construction, we are very high conviction based. So our portfolio tends to be quite concentrated. And basically, the way we pick stock and the way we build our portfolios have been reflected through our good performance, the high level of alpha, and when we break down that alpha, the major source of that, the major source of our alpha comes from stock picking, really. And so I want to touch upon a little bit on, how we do, all these things that we say we do, because it's really important for investors to understand where we add value to our investors.
So spend a minute on that. So when you think about your process, what does it look like, and maybe, given the last couple of years, which has been unprecedented, which the next 3, who knows, how has it evolved as well?
Right. First of all, let's touch upon, how we do the stock picking and the portfolio construction. So in terms of the market, as you know, is 1,700 stocks in all 3 exchanges, and we place a lot of emphasis on actually knowing the companies we put into our portfolio, and therefore the bottom-up stock picking here is very important. It sets the scene for how the portfolio will look like. And we spend a lot of time going around the country, people in my team comprising of 5 portfolio managers in equity and 3 associate PMs, together with Ismail's team, one of the strongest and most high quality research team in Vietnam. We go around Vietnam, meet up with companies. We place a lot of emphasis on corporate access. I think on average, just our investment team alone would average around 250 to 300 company visits in order to see through all the information and build a case for the companies to be put into the portfolio. On average, each of our portfolio would have between 25 to 30 stocks. At the moment, we even go more concentrated than that. VVF currently has only 24 stocks. In terms of portfolio construction, we take both the bottom-up input, which means we look at each company, analyze it deeply, come out with a robust valuation model, and come out with a target price for the stock. We also take into consideration the conviction level, meaning how confident we are in the management team, how confident we are in the earnings visibility of the company, the growth outlook, the soundness of the business model, the resiliency, as you put it, especially in this current environment. And then we would also consider the top-down factors. Things like whether interest rate is going to rise, whether the currency depreciation is going to happen, and so on and so forth, to come out with a sector, a target sector weight, or the target, even cash allocation sometimes is important as well, and I'll touch upon it later. But all in all, we try our best to deliver long-term, good, sustainable alpha through doing these two steps right. And then it is also very important to note that our risk management is very robust. We have our own system and a dedicated portfolio risk management team to monitor, to evaluate constantly the portfolio risks, covering all the major or the key risk indicators, including VAR, liquidity risk under stress test, as well as the redemption risk, ESG risk, and so on.
So we'll talk about risk. So when we talk to international investors, risk management tends to come up more and more. Now, I think that's obviously indicative of where we are in the market as well. And so I'll highlight this, and I have a performance slide after this, but all of the portfolios of VinaCapital, both the offshore and the domestic funds, outperformed in a meaningful way in 2021. They've also outperformed in 2022. What were the things that you were looking out for from a risk perspective that were key signals to either A, raise cash, or B, I know we're long-term bulls on financials, but we've been underweight. So what were the kind of the key things that led to some of those decisions?
Yes, in 2021, 2021, it was a conducive environment for real estate, for financials. The market did very well on the back of a loose monetary policy. And so we did well because we did exceptionally well in stock picking. So basically the market rose 35.7% in local currency term, and most of our funds delivered 55 to 67% return. And I think the majority of alpha contribution came from stock picking. But this year, at the beginning of this year, we started to see that in the US, the inflationary pressure is rising very rapidly. And it's, at that time, we already knew that it's very likely that the Fed will have to hike interest rates. At the same time, we also saw that there are many other risks globally, exogenous risk, as Ismail put it. We also were very disciplined in taking profit from the stocks, particularly some of the small and mid-cap stocks that did very well last year, as well as at the beginning of this year. And by Q1, they became a little bit overpriced. We were very disciplined there. And we also consciously noticed that the macro environment, even the geopolitical scene is changing, and therefore we took the conscious decision to cut down on high beta stocks, the financials, the real estate, the brokerage companies, and so on. We reduced the high beta stocks quite significantly at the beginning of the year. We raised cash, and the cash we raised from taking profit from those stocks that did well, as well as actively cutting down on high beta stocks, we redeployed it. I mean, of course, we had higher level of cash this year than last year, but we, at the same time, some of the cash were redeployed into companies that are defensive. Companies like utilities and also retailing companies. Because this year, after half a year of lockdown last year, we had in Ho Chi Minh City and elsewhere in Vietnam, we forecast that the revenge shopping and revenge tourism would be a major catalyst.
Revenge or rebound, maybe?
Yeah, rebound. We forecast that there's going to be a rebound in real retail sales, and we obviously saw that. I don't know if Mike mentioned that, but we did. I mean, the real retail sales is a big contributor to GDP growth this year. And so our retailing, the increase in our retailing position also helped a lot.
Interesting. So, Ismail, I'll go back to you. So one of the things we talked about is, financials are such a huge weight, real estate's such a huge weight. From a sector perspective, what are you looking at in terms of the near term and longer term for your sector outlook?
Yeah. So the financial sector, namely dominated by the banks, will probably have to be a primary focus. And the market maturity stage suggests we are far from being mature. The margins are still quite fat. The economic backdrop that Mike has painted suggests that asset quality pressure should be kept at bay. And you think about the demographics alone, there's going to be a bigger bankable, addressable market that the banks have to rely on. That's notwithstanding not to acknowledge or deflect the fact that there are going to be potential short-term headwinds. And that might come from potential asset quality pressure, from maybe some of the restructured loans during the COVID times that might go bad. It may also come from maybe margin pressure because deposit and funding costs are rising, but there's been delay in terms of the lending side. So we have to acknowledge that. But as far as long-term outlook is concerned, the banks are still looking quite well. But as Tu is suggesting, it's facing some short-term headwinds at the moment.
And so, too, from your perspective, I don't know if you're, I'll put kind of caught in the middle where the long-term outlook is very, very positive, but how do you think about that? Because you don't want to quote market time, but you also want to be responsible and be defensive when it's time to be defensive.
Yes, we share the view from Ismail that the growth outlook for the market is very good. The various sectors, as we can see on the screen here, are having EPS growth this year of like 60%, or even the banks where there are headwinds near term, but they are also enjoying around 37% EPS growth this year. For us, I think we look at the portfolio in a more active way. Meaning that our companies are different than the index. Our sector allocation is very much different than the index. The underweight in banks and in real estate in our portfolio is very noticeable. Our bank weight, for VVF, for instance, we cut down the bank weight last year from 30% to about just 20% this year. And it's even much less in VAF. When we think about risk, in this current environment, what we are after is more about stability, resiliency, rather than growth. So we are really going after companies that have strong cash flows, very strong asset quality. I think in VVF, for instance, our net debt to equity for the portfolio is just 16%. Compared to 40% for the market. And about two-thirds of the companies in VVF have a net cash position. That's how defensive we are.
So as you think about that, so are there, I know that any type of kind of sector positioning is really a result of the stock selection, but within that there's always a theme or two. Are there, specific sectors that you're kind of spending more time working with Ismail's team on saying, okay, let's do more research on this, let's go deeper on this company?
Sure. As I said earlier, it's a lot more about bottom-up stock picking. So at the moment, we have worked with Ismail's team to do a sensitivity analysis on all the macro factors affecting the company's bottom line. So recently, we did the sensitivity for interest rate increase for FX. And we are focusing on picking the companies that are the most resilient in the face of this headwinds, this very foreseeable further increase in interest rate, and maybe even a further devaluation of the currency. And we've found that there is a good list of companies to pursue from there. But in terms of sector, if you look at VVF, for instance, we are significantly overweight IT. And it's actually really just one company, FPT, and we have it at almost 10%, which is the maximum level allowed by a UCITS fund. And it's really just about the merit of this particular company, rather than the sector.
Yeah, and so the index weight there is about 1.9 or 2%. And so it's just interesting. I think it kind of highlights the philosophy of a 10% weight, because oftentimes people say they're active investors, they're high conviction investors, and then you actually look at the portfolio and you say, no, you're not. It's a good message, but it's actually not accurate. So, our number one holding is 10% versus a 2% index weight, And then there's significant weights where we just have zero, which I think is also just as important.
Yeah, some people think that having a concentrated portfolio is risky, but we do. We think the reverse, which is that in the market, and in a frontier market like Vietnam, knowing your company very well and then taking meaningful position in each of these stocks that you know well is actually less risky than spreading it across a basket of 50 companies at 1 or 2% each, and then you can't follow them all.
And so, Ismail, one of the things that we've talked about historically, you've talked about kind of concurrent themes. Now, some of them are longer term, the urbanization, the demographics. Are there any themes that you think are going to play out more in the next year or two based on market conditions?
Yeah, two concurrent themes that we're looking at is, of course, domestic consumption. As mentioned, 2/3 of GDP is driven by private consumption, and that's going to be going on for several years to come. I think some of the stats that Mike's team has produced, that 55% of the population is 35 years old and younger. And so there's going to be that emerging middle class, the affluent class that needs to be tapped. The second one that he highlighted is that the infrastructure spending is starting to kick in, and that needs to continue for the next 3, 4, 5 years. And again, thematically speaking, there's a lot of sectors, a lot of companies that could probably play both. So all in all, I think domestic consumption and infrastructure would be an easy one to look at.
Interesting. All right, so we've got about 15 minutes left, or 10 minutes left. I mentioned, maybe no one was listening, there are QR codes on your table. So if you have a question, please put it in the QR code. And while I see if there's any questions on the iPad. But I'll ask this one anyway. So it says, domestic investors have recently helped drive the market. New brokerage accounts have plummeted. Was this the bubble? And two, can you talk about a few of the bank stocks that you do like? So there's two questions in there. Kind of, did we see kind of peak brokerage accounts, and then what bank stocks do you like?
Right. As I mentioned earlier, in terms of bank stocks, at the moment here Ismail may disagree with me, but at the moment we prefer asset quality. So Vietcombank is also in our top holding in VVF. We like the stock because it's stable. It's a little bit conservative. It's one of those so-called state-owned commercial bank, but its asset quality is really top-notch. It has a loan loss provision of 506%, which is probably higher than anywhere I've seen. So in this current environment, I think a bank like Vietcombank would tend to do well. Another bank that we also have as our top holding in both VVF and VAF is MB Bank. It's a very progressive bank. I just had a visit to the bank in Hanoi recently, and I learned that out of 10,000 employees, they have 1,800 people in the IT department. So it's really transforming into more or less a digital bank. And all the growth stats of this bank is also great. I think on average here we see that the bank's EPS growth for this year is 37%. I think MB Bank is slightly higher than that, while traditionally valuation of this bank has been always at the discount to the average of the market.
And then a question came in as well. Actually, no, maybe I'll answer the peak bubble question. Of the 6.5% or 6.5 million, I think there's two important things there about the brokerage accounts. And this is in conversations I've had with the securities firms, which is many people actually have multiple securities accounts. And so they like the app for this, they like the app for this, or maybe this one trades. And so of the 6.5 million, realistically, I don't want to say to divide it in half because we don't know the actual number, but it's not actually going to be 6.5% of the population. It's probably closer to 3.5%, maybe 4%. And so, ultimately, I don't think you'll see it go too much higher because there's a kind of a critical mass of people with that wealth, with that investment experience. And so I don't think you'll see the same growth rate because you just don't need to see it, at least not in the next year or so. With the next 2 or 3 or 4 years, it will probably double as that emerging middle class gets larger. But I think from a, CAGR, I don't think you'll see the same growth that we had 2018, 19, 20.
Eric, did you want to talk about the fact that we've been raising our equity fund and therefore, drawn by our own performance, we've been raising a lot of fund into VEOF and VSAF. So in the future, I think that the makeup of the institutional domestic investors would be higher than the current 6 or 7%.
Yeah, it's a great question. So it's a leading question for me, but I'll answer it anyway. So Tu's question was, hey, Eric, talk about the success of the retail business. Okay. So the point that she's making is, in the last couple of years, we've made a bigger investment in growing the domestic mutual fund business, which is still very much a nascent business within Vietnam. And what we've been very encouraged to see over the last 2.5 years, particularly given the market volatility, is we've been net positive, I think roughly 25 out of the last 28 months, including net positive in September, which was a horrible month for equities. And so what we're seeing is now some people are not opening brokerage accounts, but they're actually choosing to hire professional investment firms like VinaCapital. And so you will still see people buying individual equities, but we're doing a lot of education domestically for the middle class to think about mutual funds, because mutual funds are very new here. So we're actually introducing the concept, and then it's the concept of, in a sense, outsourcing that instead of doing it yourself. So again, if we can help people reach their financial goals, well, at the same token, maybe, it'll decrease the number of securities accounts. We'll see. And actually, we're now making our funds available on some of the securities and some of the brokerage platforms. So, people will be able to buy the funds on brokerage. A question just came in. What are the turnover rates for your funds? And I guess I'll just add to that is, has that changed significantly in the last couple of years?
I think if we look at the turnover of the fund since the inception date, then it's still at around just 35%, meaning that on average, our holding period for VVF, our UCITS fund, is around 2.5 to 3 years. It did increase in the last few years due to the market volatility. When COVID first broke out, the market went from 1,200 to about 650. So there were some restructuring that we took consciously, but also before it actually happened, we actually did raise some cash. Recently, as I pointed out earlier, at the beginning of this year, we also raised cash. We also restructured our portfolio to become more defensive. So yes, in the last 3 years, our turnover could be slightly higher than that, but on average, since inception, which is about 8 years, over 7 years for
July 2015.
over 7 years for VVF, it's around 35%. Thank you.
All right, and I'm logging back in to see if I can get some questions here. All right.
I think we can take some question from the audience if you raise your hand.
Yeah, I'm not smart enough to work
Hi,
the system.
I'll just step in if that's all right. Sorry, over here. Hi. We can do a lot of work analyzing companies, finding good investments. Then we go to invest and foreign ownership limit is full. And we have the privilege of paying 10% higher for an investment. When and how is that going to be addressed?
So the MSCI ascension that I guess you're alluding to, there is supposed to be a deadline, which is 2025. Of course, if you've been following Vietnam for the past couple of years, you've been talking about this last year, the previous year, and it's a moving target. I think we're not holding our breath until 2025, to be honest. But as Eric has alluded to earlier, Vietnam has ticked off all the boxes that you would warrant to become an EM in terms of category. Having said that, we also know that a lot of funds have taken Vietnam as, I wouldn't say an off-index bet itself, but they do look at almost like an emerging market fund. And so we've seen in terms of our marketing trip or joint conferences where Vietnam is the biggest overweight in some of these big global funds, whether they're EM or FM in terms of nature. So to your answer about the FOL, there's no new progress or noise that we've heard with regards to lifting that at the moment. But as I mentioned, the deadline is set at 2025.
Yeah,
Eric?
I'll add to that. It's a source of, I'll just say, frustration, because, in talking with our own research team and then reading, things from others, if Vietnam were to get EM, and it's really kind of FOL is kind of that last, stumbling block, it would bring in $8 billion automatically just through passive, and so it would have a huge influx of the market, and then you have a lot of institutional investors who maybe don't invest in Frontier, who would now look at Vietnam because it's EM. And so kind of all of these statistics are out there. They're with the government, they're with the regulatory bodies. So, I think it is a matter of when, not if. But to Ismail's point, there's not any specific guidelines. We've talked to the regulators. We've certainly made suggestions, both VinaCapital as well as various, AmCham and other kind of business advocacy groups. So, I wish, when I joined 2.5 years ago, it was like 2023, and so it's, we're as close to as anybody, and frankly, we don't know the answer. So we just want to be very honest when we get the question. We can't say there's, a specific date that it's going to happen.
If there's any silver lining, I mean, at the moment when the market has gone down so much, recently we had some withdrawals from foreign investors, so the premium has come down, and the ownership of the foreign investors has also come down from 20 to 15%, which means that some of the foreign room has now opened up.
But that's really a silver lining that you have to look for. The reality is, and I think bank stocks are a great example, is that Vietnam trades at a discount to the rest of the region because of that. And so I think once that FOL goes away, all of a sudden, not only did you get the liquidity inflow, but all of a sudden I think that discount will go away because it's going to be much easier to move in and move out. So again, it's a when, not if, but it's certainly something that we share your view on. All right. We have time for one more question. Oh, okay. Sorry.
I can go ahead.
Thank you.
So two questions, right? One is a follow-up to the foreign ownership, right? So essentially, liquidity has gone up, which is very encouraging. But at the same point of time, as we see markets progress, the shareholder base tends to institutionalize and internationalize. What's your perspective on that? And the second question is around market performance. Israel, you mentioned about external factors impacting the market, but despite superior macro, that has impacted Vietnam more than the other markets. So any local drivers, if you can share your perspective around that?
Yeah, I mean, on the institutionalization of the market, we absolutely agree. I mean, we've been, as Eric pointed out, we've been trying to sell our funds to the market, educating the public about investing early, investing regularly, and investing for the long term. And we are seeing success in that. So I think that the institutional base of the market will expand, will increase. As for the foreign investors in Vietnam at the moment, we have seen some redemption, some money outflow, but we think that over the long run, with all the positive long-term catalyst for the economy as well as the stock market, we think that they will come back. We don't know when yet, or when it's going to be a big...
Right after this conference.
Oh, okay, yeah. Yeah, hopefully. But I think that the institutional base of the local market has to expand. Currently it's too small at just 6 or 7% of the total market trading, daily trading volume. And it's much, much lower than any other markets. We are also seeing that the pension market is opening up. And I think in the future, more people would allocate to their voluntary pension savings. And also we are seeing that even in the insurance-linked product space, the AUM increase has also been very noticeable, because I think in this market, as you may already be aware, the insurance penetration is very low. And the insurance premium growth in this market is very attractive, much more attractive than any other country in Southeast Asia. What else? The other question on the local factors affecting the sentiment of the market.
So it wasn't exogenous factors that actually led to that correction, which started in the second quarter this year. Q&Q in the first quarter, the market was flat, but then what happened was there was these investigations into what I would say regulatory breaches in both the corporate bond market, the use of proceeds, as well as investigations into maybe on the stock market itself. So that affected the sentiment of the domestic investor base. It goes back to that notion, confidence and liquidity, and that undermined it. And it was picking up a little bit more And of course, the pivot and the Fed making that posturing, then the exogenous factors had a heavier hand this time around. So it is a conflux of both exogenous and endogenous. I think we're okay on the endogenous side. It's hard to pinpoint any big risk. I don't think any new announcements or investigations will shock the market this time around, even if we do think that it can still happen. But it's almost like we're waiting with bated breath as to what happens with regards to the Fed, other central banks, and then again, it's really just about figuring out when the party begins again.
Thank you for your question. So that'll wrap up this panel. I have a few comments before we move to lunch. And one of them actually is a performance update. You know, one of the things I think we do very well is we share insights. One of the things that we do less well is actually share how well we've done. So in the next kind of basically just two very simple slides is basically give you a report card. How have we done for our shareholders? And so VOF, as many of you know, our flagship fund, combination of private equity, public equity, trades on the London Exchange. Year to date, outperforming over 1 year, outperforming over 3 year, outperforming over 5 year since inception. So a great, fantastic short-term and long-term track record, high Sharpe ratio. For our offshore funds that Tu&T manage, which is VVF, which is our daily liquid UCITS fund, and VAF, which is a monthly liquid Cayman fund that buys our local fund. Again, performance there, you know, index down 27, VVF down 17, VAF down 14. So again, no one likes to see negative numbers, but when you're outperforming the benchmark by 10%, and frankly, it outperformed by even more in the up market in 2021, you know, I think that shows a lot of skill. 3-year numbers for both of those, you know, double digits, 12 and 14 versus 3, 5-year again. So, you know, from a perspective of servicing offshore investors, Tu and the team have really done a fantastic job of really navigating not only the up market of 2021, but the very challenging market of 2022. Now, if you're saying, is that a fluke? What about our domestic funds? We mentioned earlier, we're growing significantly our domestic retail brand inside of Vietnam. We have 2 domestic equity funds, again, they're outperforming year to date through September. Year to date, 1 year, 3 year, again by double digits, 14.5 versus 4.3. This is local currency, 20% versus 4.3. And so again, whether it's, you know, year to date, 1 year, 3 year, 5 year inception, our ability to deliver for clients really is fantastic. And then VIBF, which is a balanced fund, half equity, half debt. And then VFF, which is 100% fixed income. You know, across the board, you know, we've been able to deliver excellent performance. So it's not as if we have one person that's skilled or one team that's skilled. It's really across the board. We'd like to think that we've built a research team, built a portfolio management team, whether it's domestic investors, institutional investors, international investors. You know, we have the capabilities, and we've proven that time and time again.